You should see a chart of gold, um, or somewhat of a chart of gold. I'll put it that way. So we've got gold kind of rebounding now. I guess China decided to stop selling all of its gold. They bought basically 1.2 million tons or something like that, or ounces. That's what it was, 1.2 million ounces, about a month ago. And I guess last week decided to dump off a million ounces, and they just brought gold down for about a week and a half. Of course, it just made a new all-time high up there at 35.09, and I think they were just selling into that strength. I mean, they bought it back over in here, it jumped up, they started selling it off, and they make a quick buck. Pump and dump. How's that? Um, Now that that's all done and over and everything like that, we've got now gold trying to rebound. We really need to get above the 34.80 to really gain some steam back, but it's doing a pretty good job now. But we're coming up into some resistance up here around this 34.50. I mean, you can kind of see right here at this 34.50 area, they just kind of had a hard time with it for a while, even trying to move back up after the sell off. They're just like, fine, we'll just sell it some more. And they brought it down. Now they're kind of bouncing back up a little bit. But I think um, gold is going to continue to move up. There was a report that came out that our, what do you call that? Um, Basically our debt payments or whatever it is like $500 billion or something. It's crazy. So we'll see if gold will continue to kind of feel the love here and kind of continue to move. Um, Another thing is we've got crude oil. It, man, read the reports in crude on across the world and B here in the United States. Uh, you're going to get a lot of differential thoughts here real quick, but Diamondback just came out, and if you don't know who Diamondback Energy is, they're the I'm going to say the world, but anyway, they're the largest producer of shale oil out of the Permian Basin there. Um, and I think they're the world's largest shale oil producer, but out of the Permian Basin, they're really big. Their CEO is leaving. He was retiring. His name is Travis Blinks, Stinks, Rinks. I forget it is. Stice. I forget what his last name is. Anyway, he basically came out and said shale oil's peaked out. They can't produce any more oil. And at the prices that we're currently at in crude, which we're down here below 60 bucks, they said that they just can't, make enough money at that, which that's what I've been telling everybody. Shale oil, you get below 60 bucks, that's going to hurt the shale oil guys. As far as the oil producer people out of the wells and everything like that, they're somewhere between 40 and 50 bucks. So as long as we stay above that 40 to $50 basin, if you've ever been out to the Permian Basin, this is basically Odessa, Midland, Texas, that whole area down in there. It is, I mean, an absolute desert basically. But if you just like go onto Google Maps, if you start zooming in, you're going to see all these little dots, and it looks literally like a grid. You ought to just drive through it. You'll see 6 billion pump jacks everywhere. Anyway, it cost them about in the Permian Basin about $41 a barrel to produce oil out of those pump jacks, not shale oil, not fracking, but just pump those pump jacks. So it's a lot lower if you already have an established well. Um, if you're just trying to do all the fracturing and everything like that with all the mud and everything like that, you're always trying to dig in somewhere else, so it costs more for them to do that. So as long as it's above 60 bucks, that's fine. But with this being below 50 or below $60, which right now we're at $59 or whatever it is. Maybe I can get it up here now. Everything's starting to fill in. Well, we're at 59.33 right now. But anyway, all my data is still pulling in here. But with it below 60 bucks, they're going to have a hard time doing anything. So therefore, they're going to start cutting back on production. I'll just put it that way. They expect them to kind of cut back over the next year about 10% on their wells and everything like that, as long as no crude oil stays down here. And so, alrighty, fine. But then you kind of flip the tables a little bit and go over to OPEC, which, our crude oil falls along with what OPEC does and everything like that. And here they are, say they're going to start increasing production by about 400,000 barrels a day by June. Well, now you're going to have an increase in oil here, a decrease in oil over here. So, which way does crude oil go? Probably nowhere. How's that? So, it's going to have a hard time figuring out what it wants to do. And I think we're going to have to kind of wait and let that kind of pan out a little bit to see if they do increase production in Saudi Arabia and all those places, and they actually do cut production because you got a guy who's leaving, um, you know, as the CEO of Diamondback, and he might be just sending out a note to, you know, Washington D.C. or the world saying this is what's going to happen. So nah, and just kind of go from there. So I don't know how much you can put into that, and that's why I'm kind of taking it with a grain of salt. But crude oil's up on that today after he said that. So maybe there's something to it. Of course, it's news, so markets are always news driven, and that's what's basically what's going to happen. On the other side of that coin, though, with cheaper oil, we're supposed to decrease transportation costs and everything like this too, right? Well, then you got tariffs. And then, of course, you can have decreased transportation costs, but now you're going to tariff people to death, so that's going to drive up the price of goods and everything like this. And if you actually look at global food prices, not just the U.S., if you just look at global food prices, they're still moving higher. We're 21% higher than we were last year globally. So you have higher food prices still, which is inflation, right? So, and that's the big thing. I mean, we're trying to decrease transportation costs, yet food prices are still higher, and so it's just kind of, you know, this is good news, that's bad news, that's good news, and that's bad news, and but that one's bad, and this one's good, and so. Like I said, this is going to be kind of a weird market for a while, and it doesn't surprise me at all that you're going to have ups and downs and downs and ups days, in the markets, regardless of which market you get into. Another thing, foot and mouth disease here. I'm not talking about Powell either, which is tomorrow, which he has a bad case of that. But apparently they got that real bad over in Europe now in their swine herds, which is bad. All right. So, and so if we're importing pig meat, well, we don't want it from them. So right now, the USDA is thinking about basically later this week or early next week to say no more pork coming out of Europe, just because of foot and mouth disease. And it's a big issue for us because I've already been telling you all this. Our herds are really, really been decreased. Um, we've had a huge decrease in our herd size, which we need to build that back up. And if this comes over here, well, here we go again. It's just going to hurt the herds that much more. And so they're going to be very, very, very cautious about any beef and pork coming into the U.S. just because our herd size is so small. Even though you can drive through Texas, Oklahoma, Kansas. I mean, even here, Alabama, Tennessee, all those places. You just look out there and people just have tons of cows and everything like that. So, but apparently out in the West, especially just because of all the droughts and everything like that, they've decreased their herd size. And when you look at just the whole United States as a whole, um, it's kind of decreased quite a bit. And we're down to, 19, was it 51 levels right now? So they just can't afford to have any of that stuff, getting piled in here. So they're going to be very, very cautious about what we import. And of course, everybody's going to be cautious about what we export too. So this just kind of goes both ways there. Um, Another thing that I've been kind of following a little bit, and it's just because you start hearing things, and then I sit there and go, okay, what is that going to affect? What is that going to affect? Sometimes I go from the news down to the stock. Sometimes I find a stock and I think, why is this stock going up? Then I go find the news on it. So, um, and they've been talking about um, the education but basically, student loans. There, student loans. Let's just talk about that real quick. Um, Basically, they've been discussing student loans, and I heard this on the news. Well, I read it out of an article over the weekend, and basically, what they're saying is that either they're going to start making people start paying off their student loans again. Pandemic, they stopped that. Pandemic's over. Pay off your loan. There. Um, but they're also threatening if the person can't pay off the loan, then the university has to pay it off. So regardless, you got to pay back the loan. So I was just like, so whoever gave them the loan is going to get the money anyway. Hey, that ought to kind of help those people out because they've been getting kind of hurt lately, right? And so I got to thinking, I was just like, wait a second. I said, who does the student loans? And I remember a long time ago when I was in college, people would get, these, what were they called? Pell Grants and this loan and that kind of loan and everything like that to get to through college. Of course, back when I was in college, college tuition wasn't all that much. But, uh, see if this works here real quickly. There we go. It is. So I got to thinking, well, who's doing the student loans? And so I remember all the government agents. I can't remember which was which, but then I got to thinking, hey, Sally Mae was the one that did the loans. Now, if you look them up, they're called SLM Corp, but it's Sally Mae, like Freddie Mac and all them. Um, they're the ones doing the student loans. And looky here, SLM's going up. Imagine that. Now I'm just like, okay, so they're going to get all their money back, then start getting paid off. So I think this is going to be kind of an interesting play, even though, I mean, I've never traded this stock before. They've had a really decent run here up, about $8 or $9. And I think if they can get above that, 32 area, they'll probably continue to kind of move on up as this kind of starts panning out. If they're going to start, getting all their student loans back, paid back, regardless from the person or the university, this probably will continue to kind of push higher here a little bit. And technically, it's strong, um, but also maybe fundamentally in a way, it's going to strengthen back up again. So it's something to definitely kind of keep your eyes on. If we start getting back above that high up there, they might just continue to take off. Now, I can't see them probably getting above, the 40, 45 area. But heck, that's a $10 rise in a $30 stock. So who wouldn't want to see that? And so I think that it might be a nice little play longer term. I'm not saying this is going to happen in the next month. You might, if you like to do options, you might just do the January leaps on the thing. If you want to buy the stock, I mean, it's $3 grand for 100 shares. So, and if you have a margin account, it's $1,500 for 100 shares. You might just do that and kind of see how it pans out if we start making a new high. They kind of pulled back here with the markets, kind of pulling back a little bit. And so, uh, but I think overall this might be something to kind of look at. And if there's other ones out there, I haven't looked at them. You might have some stuff off the top of your head. Well, what about this company? What about this company? I don't know. I would just, racking my brain trying to remember back in college. That was 40 years ago. What was this thing? And I would just like, and finally came to me. And so I started looking up Sally Mae, and actually it's SLM Corp. So, but anyway, I think that's probably going to be a kind of a longer term play, as long as they keep on this road of, getting paid back and everything like that. But I thought the article was really interesting. I got to think, how do you make money off that? Well, here it is. Too bad we didn't hear about it a month ago. We could have bought it down at, $25, and that'd be up $6. But it's what happens when you finally get the news and everything like that. But if it breaks back below $30, I probably wouldn't be touching it. But for right now, I think it's a stronger side rather than the weaker side. So there it is. Um, so anyway, kind of rounding things off a little bit here. We're still in kind of confusion mode, and that's the way the markets are acting right now. They're still a little bit on the confusing side. There's still companies out there that aren't giving projections. They have a tendency of selling those stocks off. Have you noticed that? You don't give a projection, we'll just sell you off. So they get kind of hammered, even though their earnings are great. So I've noticed that on several stocks who didn't give the projection, which, they really can't. They don't know if, hey, all this is going to go away in 2 months. I mean, we get all these trade deals done in the next month, this market's going to be making new all-time highs. Um, that lingers on and doesn't happen, you're probably going to get weaker and weaker and weaker in the market. And that's the problem that you run into. And so can we, start getting imports back in here with all the trade deals that we're making, blah, 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 blah. And right now, I think, China's hurting a whole lot more than we are. They have, their exports have dropped off like 28%, and which hurts them horribly because they're an export country. And so they have got to do something. I mean, it's not going to hurt us as much as it hurts them at this rate. They have to have at least like a 3% GDP to survive. And right now they're like at 2.8%, and it's not good. So, and I think they're beginning to think, hey, we might need to do something sooner rather than later, even though, I think you got two bullheads, hitting each other, and one's going to outdo the other sometime, and we'll find out how that works out. So, but anyway, we'll just kind of take things day by day and week by week and kind of see where things go. We got the Fed coming out tomorrow. As I stated earlier, we get to see what the Fed says. They're not going to cut rates. They're not going to raise rates. They're probably going to leave rates alone. Um, if they do raise or cut or whatever, I think it'll surprise the market. But I think they're just going to leave rates alone. And it wouldn't surprise me in June they don't do the same thing, leave things alone, just trying to figure out what's going to happen. But that being said, we get to see what they say. And that's usually what moves the market when they do their little press conference, 30 minutes after they do their little Fed announcement. They do their little press conference and everybody gets to kind of hammer on Powell a little bit and see what he says. That's usually what kind of makes the market really begin to move. So tomorrow afternoon, the SP Dow and NASDAQ going to be volatile. That's just the way it's going to be. And we'll kind of see how gold reacts to it, good or bad or whatever it is, and even crude oil probably as well. So, I mean, crude oil has been selling off just because of recession fears, global recession fears. Right now, it's staying above $55, but right now it can get up above 60 a little bit. It'll get to like $61, but then it just dumps right back off again. So you can say 55 to 61 if you want to, but that's currently its range. And granted, it's a $6 range, but it's just kind of back and forth in there. So it'll have some up days and it'll have some down days, and well, there it is. So, but anyway, um, I mean, going back to gold real quickly, we got out of a couple of gold trades today, in the perfect gold trade and in the gold stream. And of course, we'll be getting another trade on gold stream on Thursday. If you want to hang out and kind of learn about those, if you're not in either of those programs, that gold stream, I mean, we're 20 for 20. I mean, we've hit 20 in a row, which is crazy, right? Ever since we kind of started that thing back in December, we hadn't lost one yet. So if you want to learn more about that, you can kind of hang in here a little bit, and we'll kind of go from there. But thank you all for tuning in, and we'll come back on Thursday to see how Powell did tomorrow.